All right, guys. Good morning. Good morning. Hope you guys are well today. Yeah. So today is the last trading day of 2023. Also, if we end green today, I believe that will mark our ninth green week in a row, which is kind of crazy if we do. We're starting to go a little bit red on the day actually, because yesterday we were green. But yeah, I mean, I'm pretty sure. Let's see. The week started off this week on the 25th, which was a holiday week, of course. But if we look back at the 25th, or we look back, we've had a green week so far. We've had a green week so far. This week opened up at 474s on the spies. We're currently at 476. So hey, honestly, I hope we get another green week. You know, who knows how long this will last, but very choppy day yesterday, believe it or not. I'm not sure. I should have swung a little bit harder, but I think I just traded my funded account yesterday. Let me see. Positives of future. Yeah, we got Chicago PMI today. None of it. I mean, again, we don't really like today's not really a big day. Next week is much busier than this week and last week. It's just been slow. There's not a lot of stuff going on right now. So this is one of the slower weeks in markets. You can see Bitcoin actually up a little bit. The SPY completely flat and sideways. We got 90 people here. Again, y'all slap that subscribe button. What's up, Tiny? What's up, Val? Game, J, JP, C, Cryptic, UT, DJ, John, V, Sean, Pawn, Trading. What's up, guys? All right. Again, you can see the SPY slightly flat. If we put up a weekly chart, again, you can kind of see how freaking crazy the last couple weeks have been. We've had 1, 2, 3, 4, 5, 6, 7, 8 green weeks. If this week ends green here, basically, if we don't turn around and come this way, that'll be our 9th green week in a row, which again is genuinely crazy to me. We'll see if we get 10 next week. If today's green and next week is green, it'll be 10 green weeks in a row, which again, pretty shocking. We're going to trade a little bit today, see if we get some good stuff. See what the SPY even looks like right now. We definitely got a downward trend. Part of me wants to piggyback off of it, but we actually just broke back over the previous closing price here, so I'm a little bit nervous to mess with it. Looking at the NASDAQ here, we do got a nice little downward looking trend though. So we are in our funded account on Top Step. We're going to take a little trend trade here. You can see the trend that we've identified on the chart. Again, we are in our Express funded account here. I think we got a little trend that we can see. Try to go with I can zoom in and probably give a little bit better look to this trend that I'm seeing right here. We also, I'm trying to piggyback off of this weakness that we currently have. I think there's the trend, and I think we're right at the top of the trend line there. That's at least the goal of this. We'll see. We're kind of flat right now. Yesterday, and we haven't actually closed it out. Here's our P&L from yesterday. In this account, we made about 350 bucks. We had a 14-to-1 win-loss ratio yesterday, so that was nice. We're gonna have to exit out and relook at that. We are green in this account, this funded account. Boom, there we go. All right, so we just locked in another 40 bucks on this express funded account. We were looking at this trend, and the trend, we're gonna scalp the trend until we build up a decent cushion here. But slow and steady, guys, slow and steady. Hey, thank you, Fu. Appreciate you, brother. Thank you, man. I just went short. Again, you can kind of see what I talked about earlier. Like, we made this video on funded account programs and stuff, and kind of our system, you know, to build up profit and to get funded, basically, on some of these. So we built up these systems, right? And you know, the systems we use are pretty simple, man. They're not really like crazy difficult or anything. You know, but we build up these systems, again, usually pretty simple. What we do is we slowly build up profit on the day in the beginning. A lot of the time the liquidity is so low in the morning, right? So the liquidity is like so low in the morning a lot of the time that that we kind of scalp trends in the first things first in the morning, right? So we look for a trend, we identify a trend, and then we try to scalp that trend is basically what we try to do. Again, if you want to watch like a full in detailed video breaking down. All right, guys. Good morning. Hope you guys are well today. Sorry, I accidentally unmuted something. But yeah, if you want to watch a full in detail video on how we kind of do this system, it works really well. There it is right there. Make sure that yeah, there it is right there. So full system daily trading videos right there. And again, we kind of break it down. Like, what we try to do a lot is identify trends, attack those trends, build up a cushion, and then once we have that cushion, we can momentum trade around the open, basically. And so again, on the NASDAQ here, you can kind of see we are in this downward trend that I've identified right here. I love using parallel trends. You know, a lot of people like using trends in which you're looking for like wedges and stuff like this, maybe. I'm not really a big fan of that. I prefer parallel trends more than anything else in attacking parallel trends, right? So a lot of the time my trends will look something like, you know, let me fix this a little bit. Something like this is what my trends will look like a lot of the time. Like, I'm just looking for parallel trends. It doesn't have to be perfect, but where's gold at right now? I haven't even looked at gold. Gold dipping down a little bit this morning. We're looking at this, maybe wanting to short again, but I think we're gonna hold off. We're still pretty early on the day. I started the stream a little bit later. Do they? Do they have a parallel trend drawer? I don't know. Oh, they do. Here it is. Oh, that's nice. Appreciate it. Yeah, I could probably get rid of these. I don't know. I like drawing it myself. I'm kind of a purist, I guess. But I mean, you see that trend that I just drew would have worked here. Yeah, here's the trend. Ooh, that's nice. I do like that. My trend worked though, guys. I mean, again, look at this. Look at the breakdown happening. I would have taken that trade, but kind of talked myself out of it. But you can kind of see the trend I'm looking at. I'll try to draw up the trends from now on. I mean, W, bro. I'm sure there's some type of like trick But shout out to Peter. Happy B-Day. Happy birthday, bro. If it is your birthday and you're really a guy out there, happy B-Day, bro. Again, I'm always skeptical of these things. I've seen too many videos in which this thing gets turned on them and they start making some type of like wordplay joke. So if that's not the case, hey, happy birthday, my friend. But if not, you know. Can you set it for less opacity? I'd like it to be set with less opacity. Oh, I can. Background, white. Ooh, I like that. I see. I like it kind of like clean. I like it clean like this. I think I'll probably keep it like that. Yeah, I kind of like it like this. I think it's clean like this. Bro, I'm skeptical of everything, brother. I'm genuinely skeptical of everything. Like, y'all don't understand. I've run this YouTube community for years. And so when you run a community like this online where people, like, anonymity makes people not fear things and act dumb, I guess is the best way to put it, right? So, like, over time, after years and years of that, you start to get really skeptical. You know? But hey. What's up, Ricky? All right, slap that like button if you haven't already, Tim. We appreciate it. I also haven't done a poll yet. Will today mark the 8th green week in a row? Yeah, I need to phrase this better. Will today close green and mark the 8th green week in a row in the S&P and NASDAQ. And NASDAQ 100. Yeah, we're gonna do it like that. Well, today closed green. Well, basically, will this mark the 8th green week in a row? Oh yeah, it's totally fair. I think it's smart, but also a little funny. Yeah, I mean, bro, like the biggest way that I'm skeptical, like y'all want to know how I'm the most skeptical. I'm the most skeptical from anybody coming at me wanting to work with me, right? Like that, like people get weird with me if I don't let them work for me. I've had so many people, like I noticed the biggest mistake was bringing people on the streams, right? Like if I allow somebody to come on the stream, and usually like what I do is I let them plug whatever they got going on, right? So if they got their own channel, or if they got their own Twitter account, I'll plug their Twitter or whatever it is. If they've got their own business, I'll plug their business or whatever it is, right? And I wouldn't say it's a majority of people, but I would say like 25% of the people that I let on the show doing that end up thinking that I'm gonna like hire them to be like a co-host, or like I am all of a sudden just gonna split everything on my channel with them because they came on the stream once. And they start to act a little shady almost, and like you just realize like people have their own agenda, I guess, you know. Like I think a lot of them have thought that they could be my best bud and act like my best friend, and then maybe I would give them a piece or whatever. But like, look, man, I always tell people you're never getting equity. I started telling people, anybody that comes on the show, I'm like, look, you're never gonna have equity in my business ever. I don't care what happens, you're never getting it. I'll plug whatever you want to plug, but yeah, that's also one of the reasons I've kind of slowed down letting guests on the show as much. We're going to get some more guests on in 2024, but like, you know, like really, we don't have any guests on the show and it's just me, and we're still competitive with most of the big channels. Like they might get more views for their individual streams, but for economic reports, like we're beating most people. You know, we're beating most channels for economic reports, and so it balances. It really does. And so why add more drama to the mix and more difficulty? You know what I mean? Yeah, well, most of the time they don't ask for equity directly, right? Like, most of the time the way it works, and you know, it's funny, like I used to kind of like be friends with a couple other non-trading channels on YouTube, right? Like, I'd be friends with a couple other non-trading channels on YouTube, and like some of them, like the bigger channels, were always kind of skeptical of everything, you know. And I didn't really understand why before my channel got a little bit larger. I never really understood why there was so much skepticism about things, but over time I realized why, right? Because you have to be skeptical. Like, people have their own agenda, and especially with, again, the anonymity of YouTube, is what I should say. Not anonymity, but anonymity of YouTube makes people act dumb. You know, people will try to weasel their way into things, and if somebody else doesn't have that much going on and they're looking at you to like be there, it's hard to explain, like, you know. And it depends on if you're like Pawn is the best mod I have here. He's the one that I usually, you know, like, he knows, like, Pawn knows I'm not going to give him equity in this, but I'll start other businesses with him and work with him in other businesses, you know what I mean? And like, I think that's the right way to do it. But aside from that, Pawn helps me manage this. I don't really need anybody else to, you know, do anything. We might start having some guests on next year, though. But if they are guests, they're going to be, like, we're only going to let people that already have a decent following online. I've helped a lot of small channels grow on YouTube. And so if we start having guests on, you know, I think we're going to be selective about them, I think. Jerome Powell? Nah, Jerome Powell would never come on my live stream, brother, ever. I would love to have him on. You know me, I would let Papa Powell on here with the quickness. He's not going to open himself up to that, though. You got to understand the risk reward for something like Powell's already super famous. Anytime he speaks, like, even just on my streams, anytime Powell speaks, we got 4,000 to 5,000 simultaneous viewers watching when Powell speaks about anything here. And so when you got that much influence, he doesn't need to come on my channel to grow. You know what I mean? He doesn't need to do anything. And I don't blame him. Powell's got a hard, you know, that's a difficult job. Anything that goes wrong in the economy, everybody hates Powell for it. Anything that goes right, they either say it's fake, like the numbers are fake, or, you know, like, it's just a tough job for Powell. You know, for $200,000 a year, which is what he gets in salary, I think it's a hard job, you know. I didn't say I liked Powell. I don't envy him because of his job difficulty. You know what I mean? Like, I don't know Powell to like or dislike. All I can really do is look at his economic decisions, and I don't necessarily disagree with a lot of them. I think balance is usually the right move, and I think Powell, with regard to rate hikes, has been balanced. He's been balanced. We aggressively raise rates, and of course, like, people in real estate might not like them, of course, and like other stuff, but like, he's been balanced enough for me as a Fed chairman. You know what I mean? Like, he's been okay. I can't really complain too much about him. Of course, other people who get really wrapped up in stuff, I don't know, but hey, thanks, Stans. Uh, we're still in this little sideways trend. The more we look like we might be breaking out of that trend. So I mean, we got the little down break here, but it looks like we're out of this trend now. Depends on where you consider this trend line to be, I think. I think it's better. I think the trend is going to be better here. I think that's the better trend line. And I think the good thing about this is it confirmed the trend a lot. But again, we're just sitting tight. Bear flag on the NASDAQ. Yeah, I can see what you're talking about in terms of bear flag. So if we get rid of this trend and we draw the flag, I'm assuming you mean this on a 1 minute chart. I'm assuming that's the bear flag you're talking about. Not the best. Let me see if I can fix it. That's probably the bear flag. Here's the pole. Here's the flag. I'm assuming that's what you mean. What's up, Joe? NASDAQ at all-time highs. Yeah, I mean, inflation isn't anywhere near 40-year highs anymore. 40-year highs is around 9%. You know what I mean? So, like, we're not really there yet. We were there maybe a year and a half ago. But, I mean, that's the consequence of quantitative easing. You know what I mean? Like, when the Fed does quantitative easing, and if you don't know what quantitative easing means, it just means money printing. You know what I mean? So, like, and what that is... So basically what that is the stimulus checks that we got. Technically what it is it's the Fed Reserve purchasing securities in an attempt to reduce interest rates and increase the supply of money and print money, technically. But it's when you hear quantitative easing, it just means money printing for the most part in a lot of ways. And so with the stimulus checks that we got after the pandemic, you know, the natural consequence of that is inflation, right? Because, like, economically, and again, I don't think we can blame the Fed chairman for 2020 and beyond. I don't think it's their fault, of course. It's not Powell's fault that we had that. You know what I mean? And it was just a really weird market that I think, obviously, when you look at it, it's a really obvious reaction to money printing and quantitative easing. And so, you know, when you give people more money, they're going to spend it. When they spend it, businesses are going to raise prices because they can, because people have more money. You see it in everything. You see it in luxury watches. We were talking about Rolex prices going up, 3-4 years ago when all of this started, when the stimulus checks first started hitting. Luxury goods started going up. Rolex prices going up. Louis Vuitton prices went up a lot. And, you know, now Bernard Arnault is the richest dude in the world, who's the owner of LV and a bunch of other luxury brands. And so, again, that type of thing, I can't really blame the Fed for it. I think they've done a good job at getting it a little bit more under control over the last few years. I think we've seen inflation consistently slow down and down and down. And I think, like, the big thing that influences a lot of people's opinions about this are politics, right? Like, politics, people want one side to fail, right? And so whatever side's in power, people want them to fail, and so they always look at that under the lens of, hey, this side is a failure, right? And I think that bias is too much for me. I think you got to just zoom out, and regardless of who's in power or what's going on, you got to just look at, are things getting better? And it's obviously getting better. Like, the economy is obviously getting better. Prices are going down, certainly. Inflation is getting, better. It's slowing is a better way to put it. And so I don't think we can be too pessimistic regarding things, especially with, like, the S&P and the markets going up as well. With inflation going down, I think these are good signs, All right, so we got the little breakdown of this flag. Now we're bouncing up a little bit. We're too sideways for me though. Anytime like we look like this. Tesla needs backup. Yeah, Tesla had a big dip yesterday. I didn't realize how much Tesla dipped yesterday. But the market still closed green. Again, we're getting choppiness, so I made a little bit on my funded account. Haven't really pushed a little bit more, but all right, team. It's Friday. Here, Pawn, I got a question about watches that I'm gonna send you, brother. All right, so there's the NASDAQ pushing all the way back up. More liquidity and long, so far massive downside potential. Yeah, I mean, we're having a Santa rally for sure, and we have been. Again, y'all slap that like button, hit the subscribe button. I appreciate it. Again, this is the last trading day of 2023. I think I phrased my poll a little bit wrong. All right. Sorry, guys. I'm over here typing away. Yeah, look at the NASDAQ rip up. So I think me slowing down after getting that one scalp this morning was the right move. Again, you can kind of see me over the last 2 days. Here's my Express funded account. Today we are up 40 something or $40. Yesterday we had a great day where we made like 350 or so. Yesterday I had one of the most green days I've ever had. I got into 15 round trips. 15 round trips, made 350 bucks, had a win-loss ratio of 14-1. Okay, so again, that means I won on 14 out of 15 trades yesterday. I only lost on one trade out of 15, which I'm super pumped about. I'm super excited about it. So my drawdown yesterday as a whole, because I used the system that I used, was only 40 bucks. You know what I mean? So I'm really happy with that stat, of course. I got caught trading through chop, a couple good that ended red. I started here, man. Just ending red is normal sometimes, you know, as long as you don't allow big crazy drawdowns, you should be good, brother. You should be good. As long as you know. Yeah, barely beat it, Jared. That's still pretty good. Yeah, and on this funded account, people like, I know I'm slow to build it up because again, I love Top Step. I think Top Step is great, but you guys know me, like my TOS account's got 60K in it. Like I don't, but in this funded account, I've already had my 5 winning green days. I am green in the account as well. You know what I mean? So we'll probably be withdrawing sometime soon, but yeah, we've had our 5 green. So we have all the objectives hit to be able to withdraw eventually, you know, so. Last day for tax harvesting. Yeah, it's the last day of the year. It's the last green day of the year. Or it's the last day, market day of the year here, so. But again, we're looking kind of flat to me right now. I mean, again, we had this trend that we attacked that we made a little bit on, but since then we've actually, I think we might argue a slightly upward trend here. So like here's another little 1 minute trend forming in my opinion. It's a bad drawing of it, but let me get the trend drawer out. Like look. Yeah, I think we can probably see this little trend here. Look at this. All right, that looks pretty solid as a short-term trend. Whoa, look at the breakdown. What happened? Something just happened. Look at this. We definitely followed the trend that I drew, but it looks like we broke the trend as well. Look at news. Anybody know what stocks are dragging this down? I'm trying to figure it out. Big pullback here. Not Apple. Not Amazon. Not Google. Tesla's down a little bit, but it doesn't look like it's Tesla's fault either. Not AMD. Nvidia? Nvidia pulled back some, but it's not like a crazy pullback or anything. Very strange. I still think this trend's holding, even though that downwick might look a little worse. Anybody know what stock is dragging this down? Not Microsoft. trying to think of the other big, let me see. Alright, so we got Apple, Microsoft, Amazon, Nvidia. Let's check Meta. I'm going to go through some stocks here. It's not Meta. Broadcom, not Broadcom. Tesla. Google. I didn't realize Adobe was such a heavily weighted stock. I don't really see anything that's causing this dip here. If you guys know what's making this market fall, let me know. It's not a huge pullback in the S&P. But it's weird. I guess it could be... It could be Nvidia, I guess. Nvidia dipped. If we get a small little bounce, I might short. Alright, so we're short. We've already got a cushion on the NASDAQ today. Small cushion though, but a cushion nonetheless. Big rejection, that's nice. Let's see if it holds down there. Pop right back up. Whoa! Alright, hey, we just got lucky. We're up about $180 there really quickly. Again, I don't know what the heck these huge moves are coming from, but I will take them. Anybody know? Is somebody speaking right now? What's going on? These are big bursts of downward pressure here. Very strange. Uber and Lyft. Yeah, but they're not down. That happened crack of dawn this morning, or super early this morning. Yeah, Amazon, I guess is what this is. Hey, I'll take it though. I mean, I was short, so that's nice to see. And again, the reason I took the trade is because we broke out of the trend that we were in. You know, a little short-term 1-minute trends. But you can see we cracked the bottom of that trend line, and then afterwards just kind of, boom, broke down. So, but I'll take it. Again, up almost 200, super early for me. So I'll take it. Yeah, I mean, we're still okay, though. Like, you can see the SPY is slightly red. We're still very green this week. So, again, if we have... for the Q to turn red today... Or actually, wait. Okay, so for the Q to turn... So here's a weekly chart. Open at 409.25. So the Q would have to drop... For the Q to be red this week, it would have to drop all the way under here, just to put this into perspective. The Q would have to drop under this specific level to be red this week, right? So here's the red to green level on the Q. We'll make it big. So if we drop underneath this specific level right here at 409.25, then the Q will technically be red. For the SPY to do it, this week opened up at 474.07. 474.07. So for the SPY to do it, we're gonna have a much longer road down. So for the SPY to do it, we'd have to break underneath this level here. Alright, so those are the two green to red levels, red to green levels. But yeah, big breakdowns in the Q, big breakdowns in the NASDAQ. Again, we've been scalping these moves. Still pretty low liquidity since it's pre, but got a little bit of a bounce back up in Amazon and some other stuff. And when you see this chart, you know, we rebounded a little bit. But again, we've been able to scalp it, build up a profit. So I'll take it. Yeah, we got the Chicago PMI. Yeah, I mean, you're probably right. I'm overstating it a little bit. It's mostly because I was in a position. Um, I'm not calling it a crazy move. I think the craziest part about it on the Nasdaq though is simple. Is the craziest part about it is the extent of the moves and how quickly it happens, right? So like the Nasdaq basically went like this, you know, which happens, of course. I'm not saying it doesn't happen, but in pre-market, I think it's a little bit more rare for these big moves to happen. But to be fair, you might be right. We did get a bigger move here, and I think the original trend that I drew this morning is still pretty valid. So like, if we pull this trend drawer up. I think the original trend that we've been in is still pretty solid, and you can kind of see it. Longer term downward trend on a 1 minute chart. If we put up like a 5 minute, I'm sure it might look a little bit cleaner. Yeah. So here's a 5 minute trend. Still not bad. No, we could have tax harvesting today, I think, right? Rally is losing steam. I mean, I think so. I think it's just, this is what I think. I think tax harvesting for losses. I think, yeah, I think we've been up for 8 green weeks in a row. If today is green, if we close, even if today is slightly red, it's still possible that we have our 9th green week in a row at the end of today. So it just depends. Gold on a 15-minute demand zone. Yeah, gold pulled back a little bit. But bouncing back up. Gold's almost flat today, too, if you look at gold futures. I'm going to put the 1 minute chart back up so we can see this trend a little bit better. But you can kind of see we are kind of just flat currently. Yeah, we'll see. I hope we get some good action today. Again, right now we're in an obvious downward trend, of course, if you look at it. Still got about an hour until the opening bell. Looking at our poll here. %66% of people think, yes, we are going to have a green day today, marking the 9th green week in a row. All right, team. So again, we're kind of slowing down a little bit. I think we're still in that longer-term downward trend. We've got a green balance today to start it. And so we've got a cushion that we'll probably use to swing a little bit heavier at the open. We'll see how it goes. Poker world is kind of going out there. Phil Galfond posting about a suspected super user in one of the big platforms. So interesting. All right, so AMC short interest near all-time highs. It's honestly, it's hard to even like. I'm in AMC. I hope it goes up, but it's also one of those things where it's like, look, I'm skeptical. I've heard so much different stuff regarding AMC squeeze potential. All right, so India is going to ban 9 crypto exchanges, specifically Binance, Kraken, Huobi, KuCoin, Bittrex, Gate.io, Bitstamp, and Bitfinex, and then MEXC Global. But aren't some of these not even around anymore? Like, isn't Bittrex over? Maybe it's just the US. You trade any Forex? No, not really. Futures seems to just be a better way to put my time into. Like, I know a lot of people trade Forex, and I know it's got this big market, but I also think it's something that, like, I think Forex is too difficult to trade. Not difficult to trade itself, but it's too difficult to get access to trading Forex. Like, you got to get VPNs for a lot of places, or, you know, severely restricted, and like futures is just a better, more free, less red tape niche of trading, in my opinion. In futures, you can day trade the S&P, you can day trade the NASDAQ, currencies, gold, silver to a certain extent. Patterns are very similar to like blue chip stocks. There's no PDT rule, and it mimics stocks a lot more than the rest. Easier to find consolidated volume in futures. And again, maybe I'm biased. I'm funded by Top Step, as well as sponsored by Top Step as a trader. So like, I'm biased, of course. But again, if you want to check out Top Step, they give you a demo, test your skill in futures. If you can pass the test, great. If you fail, you're probably going to lose less than you would putting up thousands yourself and losing that, of course. So again, a great way to learn futures trading and kind of dip your toes in it if you want to see what it's about. And if you're good enough to to pass the challenge, they fund you between 50 to 150K. Been around for over a decade. They pay out millions, fund thousands a year, pay out millions in actual withdrawals. Again, the most legit futures funded program in the world, in my opinion. Although, of course, like I always tell you guys, I am biased in their favor because they pay me money. But if you want to check them out, here's the link. We also have Chicago PMI as well. Yeah, I'm in ARM right now. I've been holding ARM since IPO day. If I look at my thing of when I bought ARM, I am holding ARM since September 15th. You love to see it. I mean, we've been making money on this one. It ripped up big. Should have held a little bit more. It's a small position, but still. Yeah, I mean, somebody said there it's clear the Fed's gonna bring in crash by New Year. Sure, guys, dollar losing value. Yeah, but bro, like, number one, today's the last day before New Year. All right, so today's the last day before New Year. So, like, if we don't crash today, we're not crashing by the New Year. That's the first flaw, I think, in your thinking. So unless you're thinking we're going to specifically crash today, it's doubtful. All right, that's the first thing. Number two is that no matter what the dollar does, people panic, right? And again, it kind of shows you how the media like scares the heck out of people and just freaks people out, okay? So again, I've gone over this 1,000 times, but I'm going to go over it again. When the dollar index, if we put up a long-term chart, in 2022, all right, in 2022, when the dollar index was flying up with inflation nearing 4-year highs and all this stuff, right? In 2022, when the dollar index was flying up, what did people say? They say, oh no, it's the end of the world, inflation. The dollar's going up too much, guys. It's the end of the world. It's, the sky's falling. Inflation is there. Then fast forward to when inflation started to get more manageable and more under control, and you can kind of go to the right side here and see the dips that we've had since then. And this is mostly due to inflation getting better, inflation slowing. Inflation is not 40-year highs anymore. Inflation's at what was it at last time? 3.5% or 3% or whatever it's at now. But again, a lot of the same people that said, oh no, it's the end of the world, the sky is falling, the dollar is rising too much, pivoted to, oh no guys, the dollar is crashing. It's the end of the world. The sky is falling. What do we do? It's the end of the world. And so my point here is that no matter which way the dollar heads, whether the dollar goes up, people are going to say the sky is falling and it means the market is going to crash and inflation is rampant and out of control. And if the dollar is in a downward trend, they're going to say, hey, our dollar is getting devalued. It's the end of the world. The sky is falling. So no matter what, people are going to say it's the end of the world. And I think you got to separate yourself from that nuance of crash predictors and understand, like, a lot of the people pushing crashes, a lot of the people saying, hey, the market's going to crash, go back, watch their videos, see how many times they've predicted a crash in the last 2 years. Like, genuinely go back and look at how many times some of these guys have predicted a crash over the last 2 years in video form. What you'll see is that a lot of the same big time YouTubers that y'all are following have basically told you that there was going to be a crash every month for the last 2 years. And they've been wrong almost every single time. They said this next economic report is going to crash the market. CPI is going to crash the market. FOMC is going to crash the market. Michael Burry said the FOMC meeting is going to crash the market. And so again, you got to separate yourself from that. They're just trying to get views, just like the media and the news, the news channels, regardless of which side or whatever. Just like they'll tell you, hey, it's the end of the world, look at how bad the world is, because they're trying to get views too. But you got to separate yourself, recognize, that agenda, I guess, and just kind of understand it, because very, very rarely is it ever actually the end of the world or the sky falling or the market crashing. Most of the time it's just people trying to get views, telling you that it might, so that you'll click on their video. SPY bouncing back up though. Let's see the NASDAQ here. There's Bitcoin. Here's the NASDAQ here. We can also look at gold. Right, for sure. Yeah, I promise you though, Blaze says they put the conclusion before everything else. The best is when somebody says something 100 times when they finally get it right and act like a genius. Yeah, for sure. And again, a lot of people get mad at me. The truth hurts, man. And so a lot of people get mad at my channel because they're following some of these guys that have made 1,000 crash predictions and have been wrong. And so instead of like looking at that objectively, sometimes people like idolize and romanticize YouTubers, and I get it. And so instead of being like, hey man, like this guy's track record is horrible with crash predictions, they get mad at the messenger. Truth hurts. The truth hurts. But yeah. Right, I mean, a lot of people saying, hey, the market is just up so much. And again, the market is up, but you have to understand the natural flow of the market is up. Like, over long periods of time, I say this at least once a day, and I guess I'll say it again today. Over long periods of time, the S&P 500 is going to move up. Like, this is not really like a controversial or radical take. It's just the nature of markets. And so prior to this latest run up that you can see here, the market had actually been downtrending for a year plus, or not quite a year plus, but for a year, the market downtrended, you know, like you could see that downtrend here. And so us finally moving up and starting to test highs, you know, again, we could call it extension, but what it really is just kind of a bounce back. It's a rebound back from big weakness that we had in 21 and 22. So, you know, now that we're finally approaching lifetime highs, people are acting like we're just so, you know, so extended on the upside. And maybe on a short-term basis, you could argue that. But again, the natural flow of the market is over time, the market's going to do something like this, most likely, where it pulls back a little bit. We get that crash everybody wants, and then we kind of come back. We start testing those highs. We already had the little mini crash back there. Not a crash, I would say, but we already had a decent like 20% plus correction in markets in 21 and 22. So we've already had something like that, you know, with the craziness that happened. Yeah, I mean, I think a major pullback could happen, but I don't think it's going to be a pullback like this. And a lot of you guys have to understand, this right here was a major pullback. Like, remember, if you guys remember, up until, when did this end? Up until October, like basically up until Halloween a couple months ago, the market had downtrended for months. It had been downtrending since July. From July to October, the market was red, very red. A lot of people were saying it's the end of the world and the market's going to crash, and doom, you know, was there. But again, so it's kind of like we're just kind of bouncing back from that weakness. We had a couple really red months here. You know, again, we downtrended from July all the way to October, mostly long-term downtrends. We dipped all the way down to 410s, you know, 400s at some points and some things. So, you know, we're bouncing back now. But, and again, I think the market is a thing in which we'll probably do, you know, pull back, maybe break highs and keep going. Maybe we'll pull back more. I'm not sure. I don't really know what the market's going to do. I'm just saying, I'm just kind of giving you guys a different perspective, I think. Yeah, I mean, I don't think the Fed has done a bad job either, Justin. I know that's not like a popular take. It's certainly not. It's certainly not something in which most people act that way. But I don't think they've done a bad job at slowing inflation. You know, inflation has slowed dramatically. It's gotten a lot better, and with how much quantitative easing was going on after the pandemic, I think it's understandable that, you know, you're going to have to raise rates and discourage spending any way you can. I think the labor market is the biggest question mark. I also think that some of these rate hikes could continue to affect the economy into next year. But again, I don't think so far in present day markets, it's not too bad. It could be worse relative to what we experienced in 2020. It could be worse. Like, and again, I think I would be a little bit more on to the argument of a bubble and extension if, like, say the S&P 500 had done something like this, where we were just ripping over highs, ripping over 500, continuing to push. But we still, like, the last time we broke highs were all the way back in December of 2021. So it's been a few years since, you know, we broke highs. So yeah, it's been a couple years, and so we'll see. I think the big question is when does the SPY break this high? You know, we got this lifetime high right there, just under 480, 2 cents under 480 on the SPY. We're getting close. We're almost at 477, so we're a couple dollars away from that lifetime high. That's the real question: is when do we hit that? When do we break that? And I really don't know. Right. Well, what Blaze says, the truth is nobody knows, man. And this is how I try to design my channel. Like, I don't want to be the guy who makes a bunch of crash predictions and then he's wrong and has to kind of like dilute his videos to hide all the crash predictions that he's done that have been wrong. I don't want to be that guy, dude. I would rather just tell people I have no freaking idea what's going to happen. And let them, and maybe I'll grow slower because of that. I'll get less clicks, but I'm okay with that because I don't know what's going to happen. Nobody does, and we're all, you know, just kind of guessing. Yeah, I mean, this is a weekly chart, Doomsday. So this is a weekly chart, bro. You can kind of see, I see a little cup and handle breakout. And again, typically, I don't like things that just rip over highs like this. Usually, I'm more of the type of trader that if I see something like this, that I'm looking for like a dip, and then I'm buying that dip and then attacking the retest up there, if that makes sense, right? So I'm usually the type of person where I don't like just buying highs up here, you know, look like John Mad. But yeah, I'm not the type of person that I just like buying these high of the day breaks. I'm not that type. I like to either get in early and let it test, or instead of getting in early, waiting for it to get up there and then reject at the high, and then I buy that pullback dip instead and ride the retest up. And that way, if we get up here and we reject again, I can take profit around this level so that even if we reject and come back down, I'm still good and I'm not going to have like a crazy big loss of just kind of buying it at the highs. And if we do end up breaking back up, like if we do end up just kind of pulling back and ripping up, I'm still holding it and I can still hold a piece, you know. So like that's the way I like to approach highs in anything, on a day trading perspective, on a longer term investing, swing trading perspective. That's the way I like to kind of approach stuff. The NASDAQ kind of chopping back and forth between the previous close, you know, 17K. What's the high on the NASDAQ here? High on the NASDAQ is 17,165. So we're still a little ways. See if we have our 9th green week in a row. On the other hand, you don't want to promote that stocks rip forever. 100%. I mean, okay, let me say, Rodney, let me say it like this. Stocks do rip forever. But they have crashes in between those rips. All right, so like, I think the biggest mistake most traders make long term is that they don't understand the true edge in markets, right? And what I mean by that, and I say this every day, is that a lot of traders don't understand that the S&P 500 is probably going to move up forever. You know, not forever. Forever is, of course, impossible, but indefinitely long term. You know, the S&P 500 is going to move up. It might pull back in between then. You know, we might have big corrections. You know, we might move up big and then correct big and then head back up big and then correct big again and then head back up big again. And long term, that's going to happen mostly just because our dollars are devalued over time because of inflation and price increases. So prices are going to go up, companies are going to make more, in turn the price of the stock is eventually going to be higher because of it, and that cycle is going to snowball over time. And so, you know, the question is, when do we correct or crash or pull back or whatever you want to say? And nobody knows. We can only guess and speculate. But So yeah, essentially stocks aren't going to rip up forever. But long-term index funds, for the most part, are going to move up. You know, and I think once you understand that edge and really ingrain it in your trading systems, then you can use that to get into a lot of fun trading styles and strategies. All right, so again, you see the NASDAQ and the S&P both kind of choppy sideways, boring. Match or smack. Yeah, somebody said, regarding poker, somebody said, don't know how super users ever even get caught. Would be insanely easy to win at like 20 big blinds per 100 and not play one suspect hand for a huge sample size. 100% true, but I think what a lot of people don't realize in everything is that greed will always overpower logic in most over time, right? So like, they might start out with that plan. First pharma penny stock today. Hey, good luck, dude. Yeah, Para, it seems like you have this big dislike for the U.S. And again, I'm not judging you, brother. I'm not judging you, man. I mean, listen, you know, dislike whoever you want. What I'm trying to say, though, is that at least indefinitely into the future, you know, in our lifetimes, the S&P 500, the NASDAQ, you know, over time, they're probably going to go up. Maybe not. They could always, you know, stuff could always happen. But probability-wise, they're going to go up over time. And even right now, right? Like right now, inflation's getting better. The big thing to understand is that it's an election year next year. And so a very common and predictable nuance of election years is that they make sure they're successful economy and market years. You know what I mean? So they don't like any bad stuff happening during election years. And this is something that's been incredibly predictable, incredibly probable, incredibly predictable, is having good economic situations and good markets during election years. So, you know, at least over the next year, a lot of people were calling for a recession. And maybe we do. I don't think GDP is at a state where that's even like a worry right now. But, you know, I think that's depending on how these rate hikes that we've had over the last couple of years affect everything into next year. I think we could have some, you know, trouble from those rate hikes. But again, we'll see. It's all just speculatable. Yeah, but I mean, the U.S. stock market is the most powerful, most watched, most traded, and ultimately one of the most profitable markets in the whole world, and that's very self-evident. And again, I'm not knocking other markets. You know, make your money. I'm not judging you. We all have our different niches of trading, but I think bias, of course, plays a huge factor, and I'm biased in a lot of things too. So, yeah, pullbacks are healthy, for sure. We need pullbacks. You don't pull back, trouble brews. Bro, I gotta get one of these super monitors, dude. When do y'all think real estate will correct? $20.25. Yeah. Is it correcting down here? I don't know yet. We're kind of flat right now. And flat is good. Even if we end completely neutral today, again, it'll still be our 9th green week in a row. As long as we drew the levels here. Here's the SPY level. So SPY has to break all the way down to here to cause it to break under and not have a green week this week on the SPY. The NASDAQ, I'll have to go back and look on the NASDAQ. Let me see exactly. Let's see. Weekly chart, weekly candles. This week opened up at 16,964, 16,964.50. Okay, so we would have to break underneath this level here on the NASDAQ to technically be a losing week this week. So we got a lot of room. To put that into perspective, let's zoom out here on it, maybe like a 10-day chart, you know? So like we're gonna have to break all the way under here, you know? So we're gonna have to retrace today in order to not have the 9th green week in a row. We're gonna have to retrace, you know, 1, 2, 3 days of bearish, or 3 days of bullish action in one day, which is just not, it could happen, of course. It's not super outside the realm of like possibility, but it's unlikely. I would say it's not probable. Can you check out 20-year bonds? Sure. Yeah, I mean, I usually like looking at like T and X. Here is the 10-year. You know, 10-year on a weekly perspective is interesting, but long-term upward trend, of course. We're almost up to 5%. No, I appreciate it. That's a $20 donation. So yeah, these are long-term bonds. You know, the long-term bonds have had a pretty good week. Here's a 15-day chart. Let's see the 10-day chart maybe. Yeah, so they've still been pretty green. Long-term bonds. I don't really watch TLT the most though, so I mean, I appreciate the $20, brother, but it's not really something that I Yeah, so 20-year bonds. I mean, again, what we're seeing now is markets have ripped up for on a weekly perspective. this has mostly followed the market to a certain extent, which is an interesting nuance here. So again, remember, the market is on its almost 9th green week in a row. 1, 2, 3, 4, 5, 6, 7, 8. So, we're out of the last 10 weeks, long-term bonds have gone up 9 out of 10 weeks. So long-term bonds have been kind of following broad markets, I guess. It's interesting, the difference between something like this and, say, the 10-year. My guess is the inverse correlation is because they're competitive with each other regarding like who's buying and what. But yeah, interesting. I appreciate the $20. Again, I don't really watch super long-term bonds like that because I think, like, personally for me, I think it's much more obviously a better move to buy index funds over long-term bonds because the return is just so much more profound, short, like under 10 years and over 10 years. But especially when you're creeping into 20 plus year category, you're almost guaranteed to make a lot of money if you invest in the S&P and hold it for 20 years, or the NASDAQ and hold it for 20 years. So I'm not a big 20 plus year bond guy. But definitely interesting to see the nuance of like 10-year. I usually watch TNX, but yeah, I appreciate the donation, brother. Thanks so much, man. Again, I'm trying to be honest where I'm telling you I don't really watch this a ton. I think the nuance of it is interesting. But again, with that said, the question you have to have with TLT here, if you look at like a weekly chart, is, okay, so if long-term bonds, let's put this up next to like the SPY. What's very interesting to me, I think, here is that long-term bonds are on a 20-year bonds are on a long-term downtrend. They've basically been downtrending since 2020. Whereas, let's see what they've done since 2022. So here's 2022 here, October. 2022 started here. So yeah, here is the 20-year, kind of flat since October of last year. It's basically right where it started. When you compare that to the S&P, it's up big. But yeah, it's one of those markets I don't really watch a ton. And again, to understand like bonds, guys, bonds are basically, when you buy bonds, you're basically loaning the U.S. government, and they are giving you a specific yield. Like the 10-year right now, if you look at the 10-year, it's giving you about almost 3.9%, right? So what that means, you loan the U.S. government $100K, you buy $100,000 in the 10-year Treasury bonds, you're gonna earn just under 4% yearly. So you're gonna earn about 39%, excluding compounding over a 10-year period, almost 40% over 10 years, and they're gonna pay you that annually, the interest rate. So they're gonna pay you 3.9K a year if you buy 100K in bonds, and then at the end of that 10-year period, you're gonna get your 100K back. So you're basically gonna make 40% on your money, a little bit under 40% if you exclude compounding. So a lot of the time they're inversely correlated with markets like the S&P or the NASDAQ because this is guaranteed money in bonds, right? Bonds are guaranteed. You're guaranteed to make whatever you have, without a black swan event happening. And when you compare that to like the S&P or the NASDAQ, which is not guaranteed money, of course, the returns are not guaranteed, but the yields are much higher. So like you could earn 10% a year on average if you invest in the S&P or the NASDAQ, but that's not guaranteed, of course, and anything could freaking happen if you get stuck in a bad market timing. You could lose a bunch relative to bonds, which are guaranteed by the U.S. government. Now, these are longer term bonds, but again, like I always tell people, I don't like investing in long term bonds like this because I think the likelihood of you earning more in the S&P is very high over a 20 plus year period. So. But I appreciate the donation. Thanks so much. I appreciate the dono. All right, let's go to the NASDAQ here. Here's the NASDAQ on the right at about 17K. Here's the SPY on the left. Very flat on the day. Both of these are right around the previous closing price. We've got a nice cushion. We're green on equities as well, so that's cool. NVIDIA, what's NVIDIA doing? I don't know if the Nasdaq's gonna flush today. I really don't. I think anything could happen. I'm watching the Nasdaq here. Again, I'm seeing very choppy action. If you look at the SPY, here's the choppiness on the SPY. Like, that's what the SPY looks like over the last hour and a half. If you look at the Nasdaq had a little bit better trend if we pull up like our top step chart. Whoa, what did I do? I think I messed something up. There we go. But yeah, you can see the Nasdaq chart. We broke out of that trend. And again, one thing that I've found that's incredibly powerful for my trading is waiting for these trends to break and then attacking the break direction. So like, here's an example. You got this trend. You know, you got this trend. One of my favorite strategies is waiting for this trend to break. You see the break of it, and then buying the little pullback and riding the bounce back up. I love doing that. That makes a lot of good trades for me. And again, we've got a little cushion on our funded account here. We're up almost 200 on the day so far. Gonna have some cushion to trade at the opening bell. Won't be a flush, but won't be surprised if we get a red week soon. Yeah, I mean, I think it's unlikely we get one this week. I think it's unlikely. Again, we calculated the SPY already, where if you zoom all the way back out here and you start to look at, you know, where we need to hit in order to go red on the SPY. Like I told you guys, we would have to break all the way under this level here to have a red week this week. Same thing on the Nasdaq. We're gonna have to break well under 17,000 to have a red week on the Nasdaq too. So it's just unlikely. It could happen. I'm not saying it doesn't. I'm just looking at like probability wise. What the heck is going on here, man? Sheesh, dude. All right. Again, rejecting at that previous closing price again on the Nasdaq. Very choppy action. We've kind of slowed down our trading since we haven't had any really good directional movement here, I think. All right, guys, we got 25 minutes. I'm still sitting tight, man. I'm just kind of hanging out here. Are you guys green or red today? Hopefully y'all are red. Or, I'm sorry. Hopefully y'all are green. My bad. John has the best morning content on YouTube. Make sure to like and subscribe. Hey, thanks so much. Bears gone. They all converted. Got some. Maybe they'll stop getting mad at me, bro. I hope they'll, like, again, people say this. I said this once, and people call me a narcissist. I think people are just mad that I was correct. You know, I'm definitely top 3 most correct traders ever in the world. But hopefully a lot of you guys understand that, like, I wasn't just arguing with you. That, like, over the last few years, I've said the same thing over and over again. Like, people say I'm a broken record. They say John has the same talking points every day. And that's true. But again, the overarching point of what I'm saying now is that those talking points have been correct. They've been proven correct over time. It's not really arguable anymore. And so I hope a lot of the bearish, like super bearish traders start to really understand that if everybody's screaming the sky is falling, it's probably not going to fall, you know. And to a certain extent, maybe we are setting ourselves up for a big major pullback early next year. I think that's very possible. I'm not saying we don't, but I think you have to understand, you have to start to tune out people who are just predicting a crash every single economic report. You know, I think a lot of people don't follow economics very much. And so what I mean by that is, like, if you've never looked at CPI before, if you've never watched an FOMC meeting before, you know, if you never watch unemployment numbers yourself, or if you don't watch PCE inflation data or GDP come out, and you don't understand, if you haven't watched a lot of the YouTubers that have predicted 30 crashes over the last 3 years, you might think that there's validity in some of these big constant crash predictors. But I think over time you realize that maybe we do crash. It's certainly possible, but it's unlikely right now. It's just unlikely. We might correct, we might pull back, we might have a couple red months, but in the end, typically the market's going to go up over time, and that's why the S&P and you know, NASDAQ are such powerful index funds, is because as technology evolves, you start to have new technologies that come out, and people get excited about them, and so they invest in them, and over time prices go up, and so the markets are going to go up over time as well. So as long as you understand that, you know, maybe we do correct a crash, but smart narcissists can fake empathy and being wrong, but I can tell John is not by how he observes his mistakes and how he takes them. Just to add to the conversation a few days ago. Yeah, for sure. I think I'm not going to say I don't have an ego. I think everybody has an ego to a certain extent for the most part, you know. But I think one thing that I try to do, you know, and maybe I'm not good at it, is I try to admit if I feel like I'm wrong, I try to admit that. I think one of the worst things to see is somebody that obviously is wrong that just denies being wrong, you know. And again, it's something I teach my kids, which is that, like, hey, if you can never admit you're wrong, you have no credibility for anything you say. You know, whatever you say, it has no credibility because you're never going to admit if it's wrong. You know what I mean? And so always be willing to admit you're wrong. Admitting you're wrong is a powerful thing, you know, and it builds credibility, I think, too. Many economists are predicting recession next year. Maybe. I think it's possible we hit one. I think, again, rate hikes have a lagging effect. So rate hikes typically take a year plus to affect the economy and markets. And we've raised rates aggressively over the last few years. And so it's possible that those rate hikes influence banking, in turn trickles into everything else. And we do have a recession next year. That's possible. I don't know if it's probable, but it's certainly possible. Yeah, we're going to cover Chicago PMI today for sure. I forgot about Chicago PMI. All right, team. Let me see what else we got. We got pre-market data. Pre-market data. Get rid of that. Get rid of Santa Rally. Yeah, so we do have PMI data. Forgive me, guys. I'm trying to get my stream ready for the opening bell in about 15 minutes. There we go. It should be good. Again, market's still kind of flat. Yeah, so again, I'm already up to $100 and almost $200 in one of my funded accounts. I'm probably going to trade in one of my combine accounts that I've been managing. I might have to exit out of Quant Tower, I think, most likely is the problem. Should be pretty close to getting funded in one of these. I'm gonna go with today we're gonna have a green day, mostly just from kind of confirmation bias. People who never admit they're wrong are usually the ones who never think things through. I don't know. I think there's a big range of people. I think, yeah, I mean, I'm not going to be too specific, but like, I know some people where it's like a common thing where it's like, without question, they'll never admit they're wrong. They will never apologize whatsoever about anything ever. They will never, yeah, you know, they'll never admit they're wrong. They'll never apologize, you know, and sometimes it's over like dumb stuff too. There's no minimum time frame, Jay. There's a Or no, there's a minimum time frame. There's no maximum. So like you can try to get funded for as long as you want. I think I would confirm with them first. You know. There we go. We are up. Let's see what this one is. All right, we're in. Dude, where's my account? Dude, I was about to get funded on that account. Where's it at? It depends on if you follow the rules or not, Kenny. There's a couple of rules. The 48 laws of power says never apologize. Yeah, but the 48 laws of power are freaking ridiculous, dude. Like, that's straight up sociopath stuff, you know? Like, I understand if it's your freaking enemy, but if it's just random people, like, you know, you're just being rigid. And again, it ends up backfiring on most people like that because they end up looking ridiculous, I think. You know what I mean? Yeah, I mean, I know a couple people that are like that to a certain extent. It's a interesting dynamic. I know one. Some of them have these dogs, right? And their dogs aren't trained at all. You know, like their dogs are pooping on the floor, barking constantly, causing problems. And like my dogs are like really well trained. You know, both of them. Even Bruce. Bruce is a puppy still. He's like a year. He's not a puppy, but like he acts like a puppy because he's less than 2. He hasn't calmed down yet, which is normal, right? But both my dogs incredibly well trained. You know, they're super potty trained, so they never go inside. You know, they listen to everything we tell them. They're very food trained as well. Like I can go up to my dogs. My dogs won't take a bite of their food until I give them permission to. I make them sit and posture and sit there, you know, until I give them the green light to eat. They're just really well trained dogs. You know, definitely top 3 best dog trainers in the world right now. But no, the point is they're pretty well trained. I mean, it's pretty easy to train shepherds because they're German shepherds. But anyways, I got some people that'll argue with me about their dog being, you know, it's hard to explain. And at a certain point, you kind of zoom out and you're like, okay, you know. I think sometimes it's hard to admit, but yeah. At a certain point, you just get no credibility if you can't. I don't want to be too detailed in what I'm saying, but... Alright, I need this account. Chat with somebody. Alright, there we go. I'm gonna have to talk to trader support to see if I can get this going. All right, guys, we got 10 minutes. 10 minutes. All right, there we go. Yeah. Yeah, I'm not saying that's why. Yeah, another example, I guess, is like, yeah, never mind. Again, I'm not gonna be too specific. It's not me or family or anybody around me that y'all know or y'all would know, so it's all good. Previous close. Well, yeah, my dog's Rosie's just a great dog, man. She's just a great dog. She really is. She's just a cool dog. All right, team. Sorry, I'm dealing with it's all good. I guess I'm not gonna be able to trade the combine account that I'm waiting for. Pushing to 180 today, maybe. Sorry, I'm managing something in the background. Are there actual any YouTube financial advisors? Yes, I'm sure there are. I haven't gotten my Series 7 or anything like that because I think like the restrictions for me doing something like this would be a little bit higher, as well as like I simply just don't need it. Like I'm not marketing myself as a financial advisor or analyst. I have no idea what I'm talking about. I'm wildly wrong about everything I say. Definitely one of the top 5 worst, traders in the world right now for sure. Definitely top 3 at least. Jim Rogers is predicting a market bubble, looking to short Tesla, Apple, and other Magnificent 7 stocks. All right, team. Hey, we got 6 minutes left. According to Bloomberg, millennials got cheaper mortgages than their parents. Yeah, I mean, again, we're right around that time now. We're in the freaking 80s and 70s. We had ridiculously high mortgage rates. Again, just to put this into perspective, in the early 80s, mortgage rates went up to almost 20%. Went up to like 17% in the 80s, right? When you compare that to today, everybody's saying, oh, inflation is high, the sky is falling, it's the end of the world. When you compare that to freaking 1982, 17%, like our 3% right now doesn't look that bad, I think. It's all relative, I guess. But again, a lot of people don't understand this. A lot of people simply don't understand this. According to the Federal Reserve, look at this graph, okay? Just to let you guys know how spoiled y'all are in terms of interest rates. Look at this graph here. So again, early 1980s. Crazy high, crazy high. Am I muted? Okay, gotcha. I was about to say. Nah, market just opens up in 3 minutes, 3.5. Can you explain how AI became such a big deal? How AI will revolutionize the world like the internet, cars, telephone, etc.? Yeah, I mean, it's going to change production is the biggest impact it's going to have on everything. It's going to change production of things, specifically software. It's going to change pricing. It's going to change jobs. And it's going to change the internet and search engines specifically in a dramatic way, and it already has. So if you don't understand what I mean by that, you know, it's really funny because I had some people that basically said AI was a gimmick, a buzzword. You know, before this crazy AI boom, I had people in my chat telling me that, you know, and again, I told people no. I said AI is going to be wildly influential. I'd love to find these streams too, because again, I had some really interesting arguments with people, not arguments, debates, I would say, on the future of AI and why AI is so profound, you know. And I think a lot of the people saying the market's going to crash now are the same people that said AI was just a buzzword and it wasn't, you know, going to do anything. And then NVIDIA did the crazy historic run. AMD did the crazy historic run. And so I think AI changes production and it changes the internet. So you would have to find like researching things on the internet is fundamentally changed forever now. What I mean by that is, like, before you use a search engine, you search for something on Google, and you have to do it yourself. You have to go, you have to type it in, you got to do all this different stuff. Now you can literally just ask AI something and it'll answer it in about 3 seconds. It'll find the best option for you. It'll produce the best option for you. And over time, that's going to get better and better. Programming, like production and things. Programming is wildly influenced by AI to a really significant level. Like, it's just crazy influenced by it. Like, you can produce so much more coding, so much more programming now versus 5 years ago. Because now I can basically say, hey, AI, code me a React Native app that does XYZ. And it'll do it. It'll do it quick and it'll produce it instantly for you. And now there might be some glitches. It might be like spaghetti code, but it's going to produce that for you. So there's just a lot of ways AI is going to influence the world. Currently, you're seeing the biggest influence in things like software development, writing. You're like writing, software development, art. Obviously, like the biggest people that are going to be affected by AI are artists right now. And artist is a very encompassing word, but like digital artists, digital designers, you know, all that stuff is just so wildly influenced by AI. It's going to hurt a lot of their jobs. Like, you're not going to need to pay somebody $300, $200 for a real estate headshot. You know, you're going to get a better headshot from AI by taking a selfie of yourself and uploading that to the internet. In 20 minutes, you'll get a better headshot produced very quickly, super high quality for $20. You know, you don't need to pay some dude to, you know what I mean, come out with his camera and do it. And so photography, wildly affected by it, specifically editing, photography, art, writing. Just, it's going to influence the whole world, the internet especially. All right, guys, here we go. Here's the market open. Oh, it's a big deal. There's the opening bell, guys. There's the opening bell. We're gonna get ready to day trade the open on Top Step. We've got our funded account. And remember, we do have Chicago PMI at 9:45 this morning, so be ready for that. All right, so there's the opening bell. We're gonna let things play out first. We've got a cushion. Green movement here. We are going to throw this in sub only mode too, so if you haven't already, guys, hit that subscribe button. We appreciate it. Big green action here. Again, I'm going to go with the green day today. I hope it's green. Big green movement at the open. We'll see if it holds. Watching NVIDIA almost over 500 again. Look at NVIDIA testing 5. So NVIDIA about to break 500. right, so we're in this long on our... I tried to scalp that, and for whatever reason, I just didn't catch it, but that's all right. Nvidia right at 500. Did I make any money there? I thought I did. Let me see. No, flat. All right, we just scalped a little bit more. We're up about 220. 220. In our express funded account. So much strength from Nvidia out the gate. A little bit early for me to trade, so I'm glad I got that green and now we're out because just too much risk. Apple ripping up again. Breaking highs. There's the high break. There's Nvidia moving up, but it depends on whether Nvidia can break 500 and keep heading up, which is a different story. I'm not sure. Yeah, last day for tax harvesting and window dressing. Yeah, for sure. And I think Pawn talked about this, but I think the nuance you have to see is that a lot of people are green. And so, you know, a lot of people are going to be covering shorts. And when you cover shorts, it kind of squeezes longs up. It's a short squeeze. And so I think that's one of the big nuances for today. Shorts covering, squeezing the market up. All right, there goes Nvidia testing the VWAP at 499. Wanted to buy, just talked myself out of it. Apple pulling back some. There goes Nvidia fall. This looks weak. This looks weak. Look for weakness to show up in the NASDAQ potentially. Maybe not, I don't know, but look for weakness to potentially show up. Nvidia falling. Retrace some of it though, so, but sometimes you get a delayed response here. Struggling. Yeah, look at that retracement though. That retracement on Nvidia is pretty big. So maybe wrong, I don't know. Again, don't copy me, but Apple looking weak too here though. Very flat, guys. Y'all just be careful. All right, there's weakness. Well, yeah, some people are selling for tax harvesting, sure. But the nuance of it is that, look, there's the weakness. So again, a lot of the time, if you guys want to know how I'm able to like call that, it's because I look at blue chips to see what blue chips are doing. And sometimes there's like a delay. And again, maybe we retrace back up and rip. A lot of up wicks and down wicks, which means indecision right now. But yeah, so basically tax harvesting is when people cover their losses around the end of the year to write it off in taxes. Because it's better to cover your losses at the end of the year and then maybe get back in whatever position you're in if you think it's going to continue to go up. I think Nvidia right back up though, guys. So this is strong, I think, too, if it can break back over the VWAP. But I guess right now, I think a lot of people are green on the year unless you're heavy short. And if you're heavy short, you cover longs. You got to buy those shares back to cover them. And so I think a lot of people are going to be covering short positions, buying shares back. That might squeeze stocks higher. And I think there's just less people than like a normal tax harvesting period that are losing, because if you're longing the markets like most people are, you're going to make money. But yeah, there's the dip. No. NQ is the futures contract of the NASDAQ, sir. This is why I always try to tell people, like, you can get exposure to trading stocks and trading futures. Like, I'm trading the NASDAQ 100, basically the QQQ. The Nvidia is such a heavily influencing and influential stock that when it makes big moves to the upside or downside, the NASDAQ follows it to a certain extent. There's even sometimes a lag effect, which is what you just saw. And so again, a lot of people should be trading futures. What's also breaking the market down is Tesla here. But again, the reason we can say, hey, this looks bearish, let's watch for bearish action, and we can call that literally right here, and then we break down a lot is because what I saw here on the top right chart, I saw Nvidia, a very heavily weighted stock in the NASDAQ index fund on the left, break under VWAP. You also see Tesla's big weakness too. And so again, I'm watching blue chip stocks and letting those influence my trades. It works really well. It's something I do regularly. And again, if you want to try out futures, funded account programs like Top Step are the most legit one in the world. They pay out millions, fund thousands a year. There's the link. Watch what Tesla and Nvidia do here. Big flush. Yeah, so we called this weakness early. One day I'll learn to do what you do. Pretty impressive, man. Hey, thank you, sir. I appreciate it, brother. I got lucky, but I'll take it. I'll take it. But again, I think you have to understand the influence of trends in broad market stocks. Like Nvidia, super influencing over markets. It's just a really heavily weighted stock that's had big moves. A lot of the market's watching it. So when it puts in a weak move and breaks under VWAP, it's likely that other index funds are going to follow it because it's such a heavily weighted stock in those funds. Same thing for Tesla, same thing for Apple, same thing for Amazon, same thing for Google to a certain extent. The Magnificent Seven stocks are stocks that everybody basically watches. Well, we're not super red. Tesla's red. The market's kind of flat on the day right now. All right, now we're all the way back up. Tesla hitting that previous close. So if we are going to reject Nvidia's at the VWAP and Tesla's at the previous close, it might be right here. And again, I'm not saying we're going to reject here. I don't think this necessarily looks weak. I just think we're at kind of like a milestone level. So we could break over that. And if we break over it and hold support, that's a strong sign. Or if Tesla does something in which it rejects the previous close, that could be weak. If Nvidia struggles to break over the VWAP, that could be weak. But so far, it looks like we're breaking over this now. And so, again, if we can hold this with another candle forming, I think it'll look a lot better. But we're kind of, I guess the point is like we're at 2 milestone levels on charts. So that kind of like make it or break it levels. If a Tesla can get over the VWAP and that previous close, if Nvidia can break over the VWAP there, those are very strong signs, but it looks like we're rejecting at that spot. Yeah, Mara is one of the most heavy volume stocks in markets right now. Mostly from crypto, but yeah. So it's trying to get over these big milestone levels. Watch Tesla though. Again, if we zoom in on Tesla, you can probably see it a little bit better. We're right at that purple line, that VWAP level. Nvidia, look at Nvidia right at that purple line, that VWAP level, still trying to break. And that's dragging the markets down right now, so we'll see if they hold. Can an ETF like SQQQ go to 0? I don't know much about this short Q. I would assume if it pushes up enough, maybe, but I don't know how they run things. All right, so we did break down here. Yeah, again, I hope you guys can kind of see how we make these like theses and they turn out to work. Again, we talked about Nvidia rejecting at the VWAP and look, it did. We talked about Tesla rejecting at this milestone level and it did. And then we drew this little line up to signify where that level is. And again, we pull back down. And so I hope you guys can understand how you make theses around stuff like this and let that influence your trading. I think if you're not watching blue chip stocks and you're only watching the NASDAQ, and you're not paying attention to the stocks that are in the NASDAQ and how they flow and trend throughout the day, I think you're missing out on one of the biggest edges you get on the NASDAQ short-term trading, is watching what they do. You know, again, if it's something that you're not paying attention to, I think you're missing out on a huge edge around, like regarding it. I think you're missing out on a big edge. No reverse split. Okay, gotcha. All right, guys, we got PMI data in 3 minutes. All right, so again, look at Tesla start to test the VWAP in the 200 EMA, or not the VWAP, the VWAP in the previous close. Look at Nvidia trying to get back up there as well. So watch for if it's a sequence. So if it breaks over these levels, and if Nvidia breaks over these levels, watch for a bounce back to this. It's a big if, though. Those are milestone levels. Look like they're being stubborn and hard to break. It's one of the reasons we projected. But there's Tesla trying to break over it now. There's Nvidia trying to break over this now. Yep, so there they go. They're starting to break. And there's the move up to test it. There's Tesla breaking over it. There we go. And there's Nvidia doing the same thing. Didn't trade it. But yeah, Nvidia looking very strong, breaking over VWAP. Tesla looking very strong, breaking over the previous close. Very choppy open though. But again, same thing. I hope you guys can understand like what I'm doing and like how I'm able to say, hey, watch this, and then it happens because, yeah. Yeah, very big, strong moves. Again, we're using just to put it bluntly, or not bluntly, just to put it in easier to understand terms. We're using milestone levels and big, heavily weighted blue chip stocks to influence what our decisions are and what we think will happen on the big index funds that hold those stocks. So we're looking at the previous closing price and the volume weighted average price here on Tesla. And once we see Tesla start to break over that level, as well as another heavily weighted stock here in Nvidia, once we see Nvidia start to break over the volume weighted average price, that's saying, hey, we're getting some rebounds in big blue chip stocks. The NASDAQ, which is an index fund containing those big blue chip stocks, is very likely to start pushing back up towards those levels, right? So you can use that to influence, like, drink every time I say influence. But no, you can use that to influence whether, like, what you think is going to happen on the NASDAQ. Yeah, Chicago PMI in about a minute. Make sure to hit the live button next to the play button. Make sure you're completely live on stream. And we're going to get ready to cover this. We got about 40 seconds left. All right, here we go. We got 20 seconds. 20 seconds. 51 is what Chicago PMI is expected at. 51. Big rips ahead of this, guys. So we do have big, monstrous bounces ahead of this report. 51 is what's expected. Higher means higher manufacturing activity. And there's the report. 46.9. 46.9. Lower than expected for Chicago PMI. Lower than expected, so less manufacturing output at 46.9 versus 51 expected, so noticeably lower than expected for Chicago PMI. And again, we covered this in like as soon as it came out, within like a quarter second. And so we'll see how this influences the market. There's the link. Here's the data right there on stream. Very choppy day though right now, very choppy day, but it looks like the PMI data might be influencing the market a little bit since the open. Is that good? I mean, I don't. This is a very small report. This is not like a super big influence over markets, really. Alright, so Nvidia pulling back, Tesla right at that previous closing price that we broke over. So if you guys think we're gonna bounce, you know, a lot of the time we do something. It depends on what happens here. I see it. Look at the weakness on Nvidia coming through right now. So that's dragging the Nasdaq down. Look at the follow through on the Nasdaq here. And again, if you want to day trade just like this, and again, I'm basing a lot of it based off of the price action of Tesla and Nvidia. If you want to day trade in futures, you can day trade this left side in futures. It's called the Nasdaq. It's the QQQ price action basically, but there's no PDT rule in futures. You can day trade short, buy market, sell market, all that good stuff. We've had a pretty good couple days on our funded account. On Top Step, you see today we're up 220. Yesterday we made about the same. No, yesterday we made 350. So pretty good week on my funded account. And again, if you want to day trade, you can. On Top Step, you can day trade short, all that good stuff. No PDT rule in futures. What they do is they give you a demo. They test your skill. If you can pass the test, they fund you. If you lose, you know, which most day traders lose. If you lose, you're probably going to lose less than you would putting up the money yourself. Like if you put up 2K, you're probably going to lose that when you're learning day trading. And so this is a way to limit that risk, still have some pressure to succeed. Although not the full extent of a live account, of course. But when you're trying to get funded, it's a great way to learn. They're the most legit one in the world. They pay out millions in actual withdrawals every year, fund thousands a year. Been around for over 10 years. So again, if you want to check them out, they are a sponsor. I'm definitely biased because they're a sponsor of mine, so check them out. My other sponsor here is a company called Chart Prime, which is a trading view indicator service you can use in stocks, forex, futures, anything with the symbol on trading view, really you can use it on. And again, if you want to check it out, let me put the here's the E-mini. Now, you can use these a ton, so it's a custom trading view indicator service. Market's very flat today, so y'all just be careful. But Chart Prime is a custom trading view indicator service. So again, what I've been looking at them on is a 1-minute chart. If you put up the market oracle and the market dynamics, they also have a back tester that will back test the strategies you use. There's a screener that you can use to show you what current trend we're in. And again, this is a little bit choppy, but again, this is a 1-minute chart as well. So like, let's take a look at them today alone. And again, I think you guys, I have to change my time on this. The time is off, but you can see buy signal here, bounce, sell signal here, drop, buy signal here, nice bounce. Look at the strong sell signal that came in here. Nice dip. And you can see the flag pattern that they had here. I got to refresh this one. But just really, really useful. So that's like 4 for 4 today alone. You can also use them on a longer term chart, and look at the little flags they show you as well. I can use them on a longer term chart as well, like a 5-minute chart. I'm going to put up the Nasdaq. I think the Nasdaq is a little bit better and more liquid. But again, yeah, so I mean, look at how powerful this is. Again, nothing works 100% of the time. But look, I can't fake what I'm showing you. I really can't fake what I'm showing you. I can't guarantee you're going to make money either. And of course, I'm biased in their favor. But again, just look at the strong signals. Like, even if you want to just go by the strong signals. Strong sell signal there. This is a 5-minute chart. So this is a couple hours. Buy signal here. Sell signal literally here. And they show up about a candle later. So about 1 candle later, 1 to 2 candles. And so by that, all of these would have worked, except for maybe this one. And again, you can say this one didn't work. That's fine. But look at the strong sell signal here, and then boom. And so genuinely impressive, in my opinion. I think genuinely impressive. And again, you can use this on anything with a symbol. It's like $50 a month on you know, I think it's like $50 a month. If you use my link, you get 40% off. You can also go to this link right there and use that if you want to use that. But again, I use it a lot. I have a lot of fun with it, and it can just be powerful. I got 4 monitors, remember, so you might not be able to see me doing stuff. But also, like I always tell you guys, they're a sponsor of mine. I'm biased, of course, but check them out. Well, yeah, the opening day today has been pretty boring, I would say. We're starting to rip up, though. So, I mean, we're breaking out of that opening range. Here's the opening range. If you put a 1-minute chart up, a lot of people like opening range breakouts, orbs. is what they're called. And so if you want to know what that is, basically, here is the opening range. Here, you know, that's the opening range. So if you're gonna attack that opening range breakout, here's the open right here. This is the range, and now a 5-minute chart's starting to break over that opening range. And so again, we'll see if it holds. I'm not a big fan of opening range breakouts, but I know a lot of traders use them. So hopefully you guys are doing good. How are you guys doing today, y'all? Red or green? All right, so we're starting to rip up. It looks like that orb would have worked, I guess. Hey, nice if you're green. I don't think it's hard to make money shorting. All right, so look at the big dip. Look at Tesla. Tesla dragging it down. Let's watch NVIDIA too. We're looking at a 5-minute chart now, though, remember. We're kind of flat, too, on the day, so. Yeah, last trading day of the year. I'm just green. You know, I'm happy to be green in futures trading. Wait, oops, I forgot my, I want to leave that up. Nope, that's not it. That's not it either. There's the Chicago PMI. Just watch what Tesla does. Tesla's slightly red on the day. Remember, it is the last trading day of the year as a whole, so. Also, if you guys want like a full detailed system and like how I start the day off and am able to kind of build up profit on Top Steps funded program, I'll put this link up. Again, this is kind of a detailed system on how I do it. I'll put the link up in the chat. You guys have a good trading year? How was y'all's year? I'm green on toss. So. Yeah, all good, Mike. Take it slow, brother. Take it slow, man. That's part of it. Yeah, TOS is just just pronouncing the abbreviation for it. TOS, TOS, Think or Swim, whatever you want to call it. You know, stocks, upgraded stocks, is what I'm saying. I'll take it. You know. Market's still pretty flat though today, guys. I'm probably just gonna bow out of here, team. So I appreciate the love. Thanks so much for everything here, team. Appreciate the beautiful 2024 we had. You know, beginner trading as a whole is approaching 10 million views, and so thanks so much. Genuinely appreciate the love and the growth and everything like that. Hope you guys had a happy holiday, and let's have a great 2024. Almost up to 125,000 subs here in 2023. And so yeah, next year we'll hit 10 million views as a channel, pushing towards that 200K level. Yeah, y'all be safe. Y'all be safe New Year's Day. All right, y'all be safe. New Year's Eve, New Year's Day. Some of the craziest fun times I've had in my life have been on New Year's Eve and New Year's Day early in the morning. So hey, y'all have fun. Be safe. All right, I'll see you guys later. Y'all be good. See you guys in 2024. I'm out of here.